22-1 work together. Okay, this is a big work together. We have 5 steps and it's worth 52 points. So we have a lot of stuff to do. It says using the information shown in question assets, we're going to journalize Travel Light Corporation's adjusting entries for the current year ended December 31st. So when we look under question assets, here they give us some information that we'll need for adjustments. Here they give us our unadjusted trial balance, and then we also can see our chart of accounts that we have. And we're mainly going to be looking at these two here. Okay, so our first adjusting entry, they've already put our label in. Our first adjusted entry is going to be for our estimated uncollectible accounts. It says estimated uncollectible accounts based on aging accounts receivable is $3,697.32. So what we want to do is we want to look at our unadjusted trial balance, and we want to look at what our allowance for uncollectible accounts is. So when we look at that, we see our allowance is $22.32. Okay, we're going to take the estimated uncollectible accounts based on aging accounts, which is $3,697.32, minus our $22.32. Okay, that gives us $3,675. That is going to be our adjustment amount. So I'm going to put in December 31st. Okay, with my adjustment, remember I'm going to debit my expense account. So uncollectible accounts expense. I don't have a document number since it's an adjusting entry. And I'm going to debit for the amount we just figured out, $3,675. All right, so once we debit the uncollectible accounts expense, we need to credit allowance for uncollectible accounts. And we'll credit for the same amount, $3,675. Okay, next adjustment. We need to look at our accrued interest income. So our accrued interest income is $137.50. That is simply going to be our adjustment. So for that, we're going to do interest receivable. And we're going to debit that for $137.50. And we're going to credit interest income for $137.50. Next one, we're looking at our merchandise inventory, and it says our merchandise inventory is $45,058.15. Now here we need to look at our unadjusted trial balance. I'm going to actually go back here first. I'm going to plug this number first into my calculator. So $45,058.15. When I go to my unadjusted trial balance, my merchandise inventory is listed as $32,000. So this number I'm going to subtract. So minus $32,158.15. That gives me $12,900. So that's going to be what my adjustment will be. Now, my merchandise inventory on the unadjusted is at 32. I need to increase it to that 45. So I'm going to debit merchandise inventory. For that difference of $12,900. And I'm going to credit my income summary account for $12,900. Okay, next is my supplies inventory. That's listed as $126. So when I look, I'm going to go to my unadjusted trial balance, and I'm going to look at my supplies. My supplies here are listed as $1,276.04. I'm going to take that number minus what they should be, minus 126. My difference then will be $1,150.04, and that will be my adjustment. So 31. I'm going to do my supplies expense. Remember, we always debit our expense accounts in our adjustments for $1,150.04. And then I'm going to credit supplies for 1,150.04. Okay, next I'm looking at my prepaid insurance. I'm going to do the same thing. I'm going to go to my unadjusted trial balance, and my prepaid insurance is listed as 4,535.8. I need to subtract from that what it should be, 1,535.8. That means that I have an adjustment of $3,000 to my insurance. So I start with my date, the 31st. I'm going to debit my expense account, so insurance expense. I'm going to debit for $3,000. I'm going to credit then prepaid insurance for $3,000. Okay, next I'm looking at my annual depreciation expense, equipment. Now this is my annual expense, so I'm just going to use this number here. So date, I'm going to debit my expense account, so that's going to be depreciation, expense, equipment, and that will be the debit of $2,250. I'm going to credit then my accumulated depreciation, equipment for $2,250. Okay, next is going to be my accrued interest expense. Now this is my accrued interest, so it's simply my adjustment, simply going to be this number. So again, date. This time I'm going to debit my interest expense for $277.58, and I'm going to credit interest payable for $277.58. Okay, last one listed here is my prepaid rent income that I've earned, which is $1,000. Again, this is just my adjustment, that number that they give us. Start with my date. I'm going to debit unearned rent income for $1,000, and I'm going to credit rent income for $1,000. Okay, so those are all of my adjustments that are listed right here. I'm going to say grade step 1. Okay, now I'm going to go on to my next step. Okay, step 2 says I'm going to use the information in question assets to post the adjusting entries to the T accounts for each journal entry. For each amount that is entered in a T account, a description must also be entered. The valid entries for these cells can be found in question assets. If an account has a beginning balance, you must enter the new balance after the adjusting entry. So here is what we just did with our adjusting entries. Our description, here they're just showing us what we could put for our description. So we're going to start on our general journal. We're going to start with uncollectible accounts expense. So I'm going to find my uncollectible accounts expense. I don't have to put the date here. These are all going to be adjusting entries, so I'm going to label them as ADJ. And that was a debit of $3,675. Okay, next I have my allowance for uncollectible accounts, which is right up at the top here. I'm going to credit that. So I'm going to put in adjustment first. And I'm going to credit for $3,675. Okay, now For this one, I need to find the new balance because here's where it's saying if an account has a beginning balance, you must enter the new balance after the adjusting entry. So I'm going to put balance again, and I'm going to find my new balance. Since I have a debit and a debit, I'm going to add those two numbers together, which should give me $3,697.32. Okay, next I'm looking at my interest receivable. There it is. I skipped right over it. Interest receivable. So I'm going to label it as an adjustment. And for that one, I have a debit of $137.50. Then I need to find my interest income. Okay, I'm going to label that as an adjustment again. And for this one, I am going to credit for $137.50. I need to find my new balance after I do that adjustment. Since I have two debits, I'm going to add that together. To get $584.74. Okay, next one, I have merchandise inventory. Merchandise inventory is going to have a debit of $12,900. Again, I need to find my new balance. I have two debits, so I'm going to add together. Next, I have income summary. It's an adjustment, and it was a credit of $12,900. Next, I have a debit to supplies expense. It is an adjustment, and it was a debit of $1,150.04. Then I have a credit to supplies, an adjustment of $1,150.04. I need to find my new balance. Since I have a debit and a credit, I need to subtract. I think I'm going to put it in this one. I will get 126. Next, I have a debit to my insurance expense. So adjustment. And I have a debit of $3,000. Next, I have a credit of prepaid insurance of $3,000. I need to find my new balance by subtracting. I should get 1535.8.80. Okay, I'm going to stop here then, and you can go on to part 2 for your work together.